All righty. Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another episode of the Coffee Hour. We have some stuff to go over. All right. There's some juicy news. As a matter of fact, President Trump just came out. He did his press conference, I believe in Miami, if I'm not mistaken. So there's a lot of insight there. So we're not going to watch it because it's like a 30-minute clip. Well, not a clip, it's a whole stream. But it was about 30 minutes. So there was a lot of information from that, kind of on where the administration is at with the Iranian conflict. We had a lot of news about oil. We have some news about, crypto, not Bitcoin, but BMNR as well as MSTR. Most of the stream is probably going to be around the whole, again, Iran, oil, kind of narrative story that's ongoing and developing because again, it's impacting the entire globe. You have the G7 right now that are deciding if they want to release their oil reserves to help bring down prices. You had Russian oil that was sanctioned that is no longer being sanctioned. So we can so the world can get cheaper fuel. So anyways, happy to be back. Hope everyone had a great weekend. All right, because I know this weekend was absolutely fun. Just for people in the stream, just want to let everybody know that on this stream is probably going to be cut a little short, depending on if I get this text message or not. All right. So as always, I do appreciate everyone joining me on the stream. So before we get started, I got to post this to X as always, because X does not work with StreamYard for some weird reason. Okay, so we have Sergio in the chat. Hey, good day to you, sir. All right, we also have Padre. Hey, welcome back as always. I measure in pots. We're talking about, coffee pots, of course. All right. What type of cup are you using? A tin cup. Well, I'm using this cup, right? This is my cup that I use. And my coffee pot says it's 13 cups or it's like 15 or something, right? So I go through that whole pot of coffee just, during this stream and a little bit before, because as I'm prepping, waking up, I'll go through the first half of that and then I'll drink my second cup. So I'm actually going through almost a pot a day, which is kind of wild. That is a lot of coffee. Absolutely a lot of coffee. Let's see. Okay, screen is fuzzy. Internet? I don't know. Hopefully not. Let's see. Sean, hey, welcome back. No coffee for me at night. I definitely wouldn't drink coffee at night. The reason why I didn't stream on Sunday for this, Sunday Invest and Chill session was because I had a lot of caffeine. Unbeknownst to me, it was in this strawberry drink that I was drinking. It was like strawberry soda. Or was it strawberry or watermelon? It was one of those. I don't know. I was just drinking it. Anyways, couldn't sleep the entire night. I went to bed at probably like 4 a.m. and I was like, yeah, I'm not streaming. Like I'll be dead to the entire world. Definitely not recommended you drink coffee at night for sure. All right, let's see. Okay. All right, guys, let's get into it. All right. Cause we got a lot to cover. As always, I do appreciate you guys joining me for this stream. Let's get into it. All right. So fear and greed index, we were actually at extreme fear earlier in the day. All right. We opened up, I think it was 25 when we opened up, and it was extreme fear, right? There was still a lot of craziness happening, and a lot of people were worried where oil was going to go, because oil, as you know, can impact the entire globe. A lot of people need oil for gas, for gasoline, energy production, things like that. There's gas stations in, around this area, at least Southeast Asia, that are starting to close up because they don't have enough fuel. They have to, protect what they have. And, I'm hearing from other people who live in other parts of Southeast Asia that if you want to get fuel for your car, you're only allowed to get a certain amount, and they are not allowing you to, fill up barrels and things like that. But with the potential of, not only Russian oil becoming unsanctioned, but also, the G7 potentially releasing reserves, we could probably start to see some oil prices come down. And we actually already have. All right, so real quick, here is FinViz. This is the heat map, and we see a lot of green today, okay? In the opening, in the market opening, it was terrible. Like this was, people were getting red light therapy in the morning. It was pretty nasty. But it looks like we had a decent pump, all right, a decent recovery at least, or I wouldn't call it a pump, but we had a decent recovery. NVIDIA up 2.72%. We have Broadcom up 4.62%, all right? And we had Micron up 5%. And for Google, we are up 2.63%. Amazon barely breaking above to 13 basis points. Tesla up 49 basis points. Apple almost up a full percent. Microsoft up 11 basis points. All right, we still see that the software sector took a little bit of a hit today. We had semiconductors, ETFs like SMH, SOX, etc. They're doing pretty well, up 4.3% on the day. All right, so shout out to anyone that got into SOX long. What is it? SOXL, SOXL. So if you purchased that ETF, which is a 3x leveraged position, bull share, congratulations on that. All right, consumer defensive doing well as well. All right, so like I said, across pretty much the spectrum of the S&P 500, we had a pretty decent day. Okay, for VIX, all right, I follow the VIX. This is pretty much your fear and greed index right here. We were past 30. All right, past 30. That is absolutely crazy. We have not seen 30 in a very, very long time. Okay, but it looked like the market just, again, was losing some of that volatility throughout the day, especially since, Trump was coming on camera and saying, kind of where they're at with the administration and, some of the plans to basically bring down oil, right? Again, oil is really driving the narrative. That conflict is really driving what's happening in the broader market. You guys know this. We've been covering this for about a week now, easily a week. So since it started, so you guys are no stranger to this stuff happening. But just for any new viewers, whenever there's geopolitics, conflicts, uncertainty, usually we see the VIX climb. All right, and again, I like to use this as kind of a measuring stick. But this was April, right? This was Liberation Day. We were up to 52. Okay, and then we saw these spikes here. October, you guys remember October? That was a pretty brutal time. That's when we saw 10 happen, crypto liquidation, Bitcoin liquidations, things like that. And then again in November, right? We saw it spike up to November, and then here we are. It's just been an absolute rocky ride. So this spike up this time was due to oil actually reaching above $115 a barrel. That is crazy. But right now, oil is hovering at around $60 or $86 a barrel, if I'm not mistaken. We'll check that here in a minute. For the S&P 500, okay, up 83 basis points for the day. Again, doing really well. A percent is a pretty big deal, pretty big move whenever you do consider that. IGV, expanded tech software. A little bit of a sell-off again, nothing too extravagant here, just down 30 basis points. Over the last month, it looks like it has started its climb back up. All right, from its lows, it's up about 14%. Year to date, still down about 15%. All right, so for gold, surprisingly, it started to have a pump in the after hours, but in the beginning of the day, it looked like it just fell off a cliff. Right. It looked like the dollar was actually doing better than, gold. So I don't know how that even all makes sense, but apparently the dollar has been doing really well. We saw bond yields starting to spike. The 10-year was pretty close to 4.2%. So I have not checked the T-bills since the start of the stream. Actually, I forgot to check it this morning. But we did see that T-bills were on the rise. Okay. And whenever T-bills are on the rise, that is not good at all. All right. So for silver, up 3%, and then Bitcoin up. It's actually recovering. It was at, let's see, over the last 5 days, it did reach highs of like 73,000. So we're starting that climb back up. All right. So over the weekend, about 4.4%. All right. So not bad there. Well, at least for today, up 4.4%. I did want to show you guys this. This is oil. All right. So this is crude oil. This is the price. You guys can see this drop here, right, from 95, but really oil was closer to about $116, and it dropped down to about 86. So we see that right here, right? We see this big drop. Futures seems to have dropped as well. So that's really good. It's bringing down some of that fear and uncertainty around energy and energy dependence. The Strait of Hormuz is still contested. Still a lot of, I don't know, I don't want to call it misinformation, but it's just a lot of back and forth. Like, it's very muddy. You don't really know what's open, if it's open. The U.S. says they're going to protect ships going through. You have Iran that's saying they're not going to strike any ships that are not not U.S. Then they switch their minds up over the weekend, they said they weren't going to attack their neighbors unless attacks were originating from these countries, the GCC, the Gulf Coast Cooperation, right? You have Bahrain, Qatar, etc. These are all energy producing countries, right? You have Bahrain Babco, which is a Bahraini petroleum company. They got hit multiple times, right? They're getting hit multiple times. You have Qatar's LNG shut down. It's going to take 2 weeks to bring them back online. And that may not even happen anytime soon. They're still closed down because an LNG, if you guys don't know, LNG is liquid nitrogen gas, I think, if I'm not mistaken. But if an LNG tanker was to take a missile, that is probably equivalent of a very large bomb going off if it's in the harbor, right? If it's in the harbor. So typically what countries will do, not all countries, but the United States in particular, what they'll do is they usually go out, they keep LNGs about 20-ish miles outside of the coastline. They'll check it for, security reasons, all that stuff, and then they'll bring it in. Because if an LNG was struck, that is going to destroy not only the coastline, but all the buildings and cities. All the glass will basically be blown away, right? If you guys remember what happened in Lebanon and Beirut, you had a large fertilizer plant, if I'm not mistaken, that was blown up, and it basically destroyed all the windows and everything in that area, right? In that city of Beirut. So really a lot of crazy stuff happening. Anyways, to bring it all back, Iran, not really sure what they're doing. The Strait of Hormuz is still kind of muddy. There was some strikes over the weekend on some tankers. And again, you have crews that don't want to just travel through there. There's news saying that, there is ships traveling to and from and through. So still a lot of misinformation, or a lot of muddy information. Maybe not misinformation, but definitely a lot of muddy information. Not really sure who to believe. Because again, you have the United States saying, "Hey, we're gonna offer you guys insurance, $20 billion worth of insurance. You can keep shipping, and we'll guarantee your protection, etc." But you still have crews that are not wanting to traverse that Strait of Hormuz. So, anyways, moving on from that, we do have actually. Let me close this. Yeah, this is a earnings calendar, but we'll use the good old Facebooks right here. So we have earnings from Earnings Whisper. We do have a couple of earnings that I'm definitely going to be covering. We have Oracle, huge for the AI trade, big deal. So I'm going to be covering Oracle tomorrow after close, like always. Let's see what else we have. I haven't even had a real chance to look at this, but we have Oracle. Let's see what else we got. Okay, it might just be Oracle as far as the AI trade. Let's see. Sergio says the market just went to extreme fear with Eugen's description of LNG boats. Yeah, I mean, it's scary, man. I'm not gonna lie. I knew about that a while ago, a long time ago. And as soon as I started hearing about strikes, I was like, I pray that they do not hit an LNG, because an LNG explosion would definitely rearrange some geography depending on where it's at. So let's hope that the Iranians aren't that stupid. Or excuse me, not Iranians, but more so their government and their military is not that stupid to destroy an LNG that's fully loaded, because they will take out not only that port, the geography around that port or around that ship, and probably the city along with it. So anyways, getting back to this, yes, or it seems the Oracle is pretty much a big one. I don't know if I'll cover Adobe. And I don't see any other companies that I'm interested in. So anyways, this is it. All right. HP did report today. I'm not going to cover them. Voyager, for any space aficionados, they are added into that Mars ETF from Roundhill. So Voyager also reported today. I don't know what they're at. Okay. Anyways, moving on. We do have some big macro news happening this week. All right. We have the consumer price index being reported. All right. CPI, core CPI. And we also have initial jobless claims on Thursday. Okay, the CPI is coming out on Wednesday, so not that far along. Today, nothing burger, right? There was nothing scheduled, and then Tuesday, really nothing as well. So I think Thursday is going to be the big one. Friday is also going to be another big one, right? We have GDP, that's their revision, so we definitely need to see what that is. Again, we're not going to feel the effects of the oil spike probably for a couple of readings, maybe 2-3 readings. But even then, it was kind of short lived. But still the impacts were pretty large. And then we'll have PCE, core PCE on Friday. So job openings is also going to be a big one because we had that really big negative number of $92,000, or excuse me, $92,000. We had 92,000 in job losses, right? So this week is going to be a pretty important week. I don't suspect there will be a lot of volatility, but you can never really tell, right? Okay, moving on now. Let me just check the chat. Let's see. Oracle going down, maybe not tomorrow, but it's going down. Yep. Yep. Let's see. All right, moving on. Okay, so I'm going to start trying to cover this going forward because I finally got my damn Robinhood dashboard the way I like it, and I started adding all the tickers that I like to follow. You guys can see some of the ones that I do own. SIL is another one, uranium, but not just those, right? I like to cover SMCI as well, even though I don't like the company. I'm super bearish on the company. They are important to the AI trade, so I like to listen or just keep an eye on them. BMNR is another one. MSTR, of course. We have Palantir. So I'm going to start trying to incorporate this into the stream. I just haven't figured out a format that I like because I don't do the market open and I don't do the market close when these tickers are going crazy. Maybe I will in the future. I don't know. It really has to go along with my schedule, right? But yeah, I'm going to figure out how I can incorporate this to, just add a little more production value to the stream. So hope you guys will enjoy it whenever I figure that out. Okay, moving on. Michael Saylor's strategy adds, and this is a huge, huge deal, a huge buy, all right? 17,000, almost 18,000 Bitcoin for $1.28 billion. All right, they really hit that ATM. Their stretch product has been doing phenomenal, a lot of investor interest, and Saylor was not shy to hit that button, right? So they acquired close to 18,000 coins valued at $1.28 billion, average price of 70,000 per Bitcoin. So they missed the dip. Of course, they missed the dip. But to pay for the purchase, strategy sold 3.7 million shares of variable rate Series A perpetual stretch preferred stock. That is a mouthful. So they sold a bunch of stretch, all right, for 377 million. And then they sold 6.3 million of Class A common stock, i.e. MSTR, for 899 million. All right. So Saylor was not shy about that. And they went on to buy up a lot of Bitcoin. So as a shareholder, well, I guess I would be a derivative of the shareholder, right? I don't really own MSTR per se, but I do own MSTW from Roundhill. Again, that's the whole point. I'm just super bullish on strategy. You cannot convince me otherwise to get out of the thing. If you're bullish on Bitcoin, you're bullish on strategy. I know, again, it's a pretty controversial stock. He's a controversial figure, especially even in the Bitcoin space. Even in the Bitcoin space, you have Bitcoin maxis that don't like him, which is crazy. Because you would kind of think that, all people in like Bitcoin would, be rooting for one or another. But no, you have, of course, people who are, perceived to be smarter than the other. So you have that ego stuff. But anyways, that's what you usually see on X. For Bitmine Immersion, BMNR, all right, they had a huge announcement today. And the biggest part of this announcement is that they're holding $1.2 billion in cash. All right, that's up substantially. So Tom Lee was not shy about hitting that ATM as well. They're currently holding $1.2 billion in cash. They have virtually no debt on BMNR, right? They were holding, I think, $630 million last time I talked about them. So now they're holding close to double that. So they also are, let's see, staking, if I'm not mistaken. Yeah, the company says its annualized staking revenue is about 174 million with roughly 3 million Ethereum, around 67% of its 4.5 million ETH holdings currently staked. So they're earning staking rewards from the Ethereum in the amounts of $174 million when annualized, I'm going to assume. So that is huge, right? Unlike Bitcoin, that unless it's staked, MSTR does not stake its Bitcoin, but, Tom Lee's BMNR does, so that's, a good thing. That's a good thing long-term. We also had another big deal right here. Let's see, where is it? Did I miss it? Oh, yeah, right here. So with its current ETH position, it represents 3.76% of the total supply of Ethereum out there. And, he keeps talking about this alchemy of 5%. He's trying to get to 5% of total Ethereum holdings, so he can become, or BMNR can become, a very big player in the space, right? That's what Mstr is trying to do as well. They're trying to get up to about 5% of the total network. Totally huge deal here. And they're doing it much faster. BMNR is doing it way, way faster than Mstr could have done, right? So that's a big deal here. Okay, so moving on. NASDAQ is going to team up with Kraken to expand tokenization infrastructure. All right, this is just a crypto segment right here, so bear with me. We're going to get into the oil and commodity sector and watch a couple clips here in just a minute. But NASDAQ teams up with Kraken to expand tokenization infrastructure. And this is, again, bullish for Ethereum. All right, NASDAQ on Monday announced it will collaborate with Payword, parent company and cryptocurrency exchange Kraken, to develop tokenization infrastructure aiming to capitalize on the growing interest in blockchain-based equities. Tokenization is a process of turning financial assets such as bank deposits, stocks, bonds, funds, and even real estate into crypto assets that can be traded on blockchains, which are the ledgers underpinning digital assets. All right, and here's just some history for you guys. In January, the New York Stock Exchange parent Intercontinental Exchange said it was seeking regulatory approval for a blockchain-based platform to enable 24/7 trading on-chain settlements of tokenized securities. Robinhood, Gemini, and Kraken have already launched tokenized stocks in Europe, with Coinbase, or while Coinbase and startup Denari are seeking approval for similar products in the U.S. All right. Separately, the NASDAQ also announced a partnership with German exchange operator Börse Stuttgart, tokenization settlement platform, to facilitate trading of blockchain-based equities across Europe. NASDAQ said that it plans for tokenizing stocks and other exchange-traded products that will focus on corporate actions, proxy voting, and shareholder engagement. Tokenization has the potential to unlock the benefits of an always-on financial ecosystem, 24/7 trading. Holy hell. Enhancing how investors access markets, how issuers engage with shareholders, said Tal Cohen, president of NASDAQ. All right. So for those who, I had to dive a little deep on this myself. All right. So what exactly are they using for, or from Kraken exactly? Kraken has something called Xstocks, and it's a framework. All right. And it's using Solana, Ethereum, and the TON blockchain. All right. So again, we see this happening. We see more and more of these, companies, these banks, these institutions moving onto the blockchain, and they're using the premium choice, which is Ethereum. All right. And that is why, again, I'm very bullish on something like a BMNR, because more and more companies, more and more institutions, traditional finance is moving onto the blockchain, and they're choosing Ethereum or Ethereum Rails. All right. So that to me is very bullish for Ethereum. Okay, moving on from that, we're going to be moving into our semi-political, mostly about the geopolitics stuff happening in the Middle East. We're going to move into that segment. So bear with me, all right? Again, this is a politics-free channel. I don't care if you're a Democrat. I don't care if you're a Republican, MAGA, woke. I could care less. We are just here to use to use the facts as they are, so we can understand what's happening in the broader world and how it impacts our portfolios. Okay. All right. So here we go. All right. Trump says Iran war will end very soon. All right. He predicts lower oil prices. This is probably getting close to the whole thing that he said on Liberation Day. Now's a good time to buy stocks. So if people are looking for a bullish signal, I mean, I don't know if this is it, but it kind of reminds me of that. Anyways, President Donald Trump at a press conference at his golf club near Miami. The war against Iran will end very soon, but not this week. He also predicted that oil prices, which had surged to over $100 per barrel due to fears of the Strait of Hormuz would remain effectively closed, will drop. All right. Trump spoke earlier in the day to Russian leader Vladimir Putin about the war, which the U.S. and Israel began on February 28th. This is the actual clip. It's about a half hour long, like I said earlier in the stream. I just finished watching it before the stream. Just a couple. I mean, this pretty much summarizes it all together. But one of the things that he said that I found interesting, right? Because reporters were asking him questions, hey, Iran has a new, leader, and it's the former leader's son, right? So now you have a former leader, or excuse me, you have this new leader who lost pretty much a large portion of his family, if I'm not mistaken, because I heard there was reports of other members of his family that were killed in the strikes. So he's not exactly, going to be looking at the U.S. to make any type of deal. And you have the IRGC coming out and saying that we could, prolong this conflict for years, right? That again, I said at the beginning of covering this that Iran's not just going to embrace democracy tomorrow, and they're not just going to elect a leader. Like, that's not going to happen. This is not Iraq. This is not Afghanistan. Again, a lot of information flying out there. Will there be boots on the ground? Will there not be boots on the ground? There was talks of, a possible U.S. draft for some reason. Again, that was from Caroline Leavitt when asked, is a draft potentially an option? And she said, hey, the president doesn't want to keep any options off the table. But of course, you don't need a draft for this. Okay. There's not going to be a draft for this Iran conflict. I just can't see. We didn't do a draft for Iraq, didn't do a draft for Afghanistan, didn't do a draft for the Gulf War. Why would there be a draft for Iran? Again, it's probably just fear mongering that's out there. Don't believe it. Don't believe the FUD. But anyways, you have this new leader in place. And Trump already says he's not a fan of him, right? As if he could pick and choose who he wants, but he's not a fan of him. And I don't know if they're going to be negotiating some type of ceasefire or ways to basically reopen the strait or what have you. But again, the GCC, the Gulf Coast Cooperation, that is in the Middle East. You have Bahrain, Qatar, Saudi Arabia, Jordan's even in the mix, even though they're not part of the GCC. You also have Iraq there. All these places with U.S. bases are getting struck, right? And the UAE, Dubai's been taking some incoming as well. So the war is not going to stop. The U.S. has sunk a bunch of Iran's navy, and they're not just going to take that on the chin. So again, I think that this is going to continue. This conflict is going to continue at least for the remainder of this week, for sure, right? Unless we hear something because you had both sides reporting different stories, right? You had Iran that says, no, we're not going to be settling for any type of peace. And then you had Trump saying, no, they want to negotiate a new deal. And then Iran said that, no, that's not the case. That's a lie. So again, you don't know really what to believe. There's a lot of fog of war happening, a lot of muddiness happening. All right. But what did all this have? What kind of impacts did this have? Well, gold dipped. Actually, we can probably, we're going to front run this one. Crude oil drops below $90 after Trump says Iran war could end very soon. All right. So crude oil futures plunged post-market Monday after CBS News reported that President Trump said the U.S.-Israeli war with Iran was very far ahead of schedule and very complete pretty much. Good old Trump. All right. Just using simple language. All right. Trump told CBS in a telephone interview that Iran has no Navy, no communications. They've got no Air Force. The Strait of Hormuz is seeing more shipping traffic, and that he is thinking about taking it over, although it is not clear what specific actions the president is considering. On top of that, Cuba is starting to make its way in the news, right? There's not talks of an invasion of Cuba, but there is talks of, a friendly takeover of Cuba. Now, I don't have much on that whole news segment, but don't be alarmed if you start seeing that start to pop up, right? It seems like, hey, you're in for an inch, as far as Venezuela and Iran, you might as well be in for a mile. Might as well just continue this from the Trump administration's point of view. So, luckily there's not a whole lot that comes out of Cuba, so I can't imagine, there being huge impacts to not only the stock market, but uncertainty or geopolitical risk, at least in my opinion. We're talking, way back in the day, the Cold War, Russia tried to sneak over some nukes into Cuba, just to have nukes closer to the United States. And that was a pretty big deal. We pretty much almost went into a nuclear war at that point. But luckily, you had both administrations, Russian or the Soviet Union at the time, and the United States kind of, calm things down quite a bit, because that would not have been good. But that is the history, the lore behind Cuba, and kind of why it's so important, because again, they still have ties to outside influence. The United States is doing this thing where they're trying to maintain and even exert its influence in the region, right, in this hemisphere. So again, this all has to do, in my opinion, with China. and to a further extent, Russia. All right. Trump also said the U.S. would waive certain oil-related sanctions as a way to ensure adequate oil supply and lower prices. Secretary of Energy Wright said earlier in the day that the administration is considering coordinating sales of oil from the U.S. Strategic Petroleum Reserve with releases from other countries. Energy ministries from the G7 nations are expected to hold a separate virtual meeting on Tuesday, with country leaders meeting later in the week. They're talking about releasing those oil reserves. All right. That's why we have futures dropping, oil coming down a bit. All right. But if we hear some negative news about these countries, the G7 nations saying, hey, we don't want to release anything, which is already being the case, we could probably see that more uncertainty will come later in the week. All right. But tomorrow we should have, some more information about this. All right. Should the disruption persist, larger waves of production shut-ins could emerge through the next week across the region, dependent upon relative storage positions. Macquarie wrote, the reduced transit is creating the action and will require numerous policy, military, and logistical responses to mitigate the upward price trend. All right. From a domestic politics perspective, you have, the midterms later this year. You definitely don't want high energy costs on Americans. Americans are going to be suffering, along with the rest of the world with high energy costs. And we talked about this on a previous stream, that if energy costs go up, well, people are going to have to choose between, buying and splurging on retail or fueling up the car and making sure that the house has electricity, right? So, we could probably potentially see impacts of that type of nature if oil continues to stay at an elevated price. So, this is why it's such a huge, huge deal. All right. So moving on, gold dips with inflation in focus, but rises after hours. Trump signals Iran war nearly over. Again, I don't know if I buy that. Gold has been really, I don't know a better word to use, but wonky over this last week or since the start of this conflict, because you would assume that whenever these geopolitical events happen, these conflicts happen, that gold would rise with all the uncertainty, but that has not been the case. That's actually not been the case since the start of this conflict. As a matter of fact, the only asset that did rise on the announcement of this conflict was Bitcoin. But Bitcoin being a very volatile asset as it is, had jumped up to 72K, if I'm not mistaken, and then it kind of fell back to 66K. So it's been in this range. It's probably going to be in this range for, I don't know, maybe a month or two, maybe a couple of months. Again, no one really has a crystal ball to tell you when to buy or when the low is, but if you're a believer or not in the 4-year cycle, and as I'm finding out of the power rule, all right, something I would recommend people look into, absolutely fascinating, the power rule and its correlation with Bitcoin, as well as the 4-year cycle and why the 4-year cycle is actually intact. So I might actually be changing my own perspective on that, because I didn't think in the beginning, and I'm going on a tangent here, but I didn't think in the beginning, when I was kind of getting into this whole Bitcoin thing, that the 4-year cycle was still intact, because of the institutional adoption, world adoption, et cetera. But after listening to the power rule, it does make sense why, the 4-year cycle is still intact. So we'll see how that all plays out. But anyways, referring back to gold, gold futures fell Monday on fears that rising energy prices could spark inflation and delay interest rate cuts in the U.S. Again, if inflation comes back, you would assume that gold would rise, but not the case. All right. But prices turned higher after hours following remarks by President Trump suggesting the war in Iran could be over soon. I personally don't think so. I think that the war is very complete, pretty much, Trump said, according to CBS. They have no Navy. We already covered that. Very far ahead of his initial 4 to 5 week estimate time frame. All right. The gold price has continued to weaken, and TD Securities believes the move reflects 3 factors. And this is important right here. At least this is an important perspective from TD Securities. The market is pricing Fed Reserve interest rate cuts, consistent with the less than conventional historical impact that wars have had on Fed policy. It is pricing reduced gold purchases by Middle Eastern nations, and gold is no longer a fringe asset and is instead now held by a large majority of institutional investors based on the bank's analysis of 13F filings. From a data standpoint, attention now turns to upcoming U.S. inflation releases for CPI on Wednesday and PCE on Friday. If the February inflation data is higher than expected, that outcome would reinforce the view that the Fed may delay any rate cuts in light of the energy shock. All right. Forex.com analyst Fawad Raza, I can't even pronounce that last name, said in a note. All right. So absolutely crazy what's happening again for gold. I always assumed that whenever geopolitical unrest happens, usually gold does well, but it does not seem to be reflecting in this event. And I'm not saying gold is broken or anything, or that is not still the case. It's just the market is not putting money in gold for whatever reason. That probably also has to do with a strong dollar. As a matter of fact, let's take a look at the Dixie while we're at it. Dixie chart. Let's see where the dollar is sitting, and I think this probably has more to do with that. So this is the US dollar index. It was at 99. So yeah, it was at 99. I mean, it's still a pretty strong dollar, all things considered. Let's get rid of this ad. So over the last 5 days, up 4 basis points. Over the last month, almost up a full percent, 85 basis points. And over the last 6 months, up over $1. So year to date, it's actually, still doing pretty well. It's not heading lower. So that's always good, right? Okay. Anyways. If you're a follower of the debasement trade, then you already know where this is going. The Trump administration already said that they want a weaker dollar because then that makes purchasing goods from the United States more attractive for foreign nations. So we'll see if that happens, if the economy does in fact run hot later this year as more continued economic data comes out. Okay, so I want to watch a couple of clips here. All right, this one is pretty short, 5 minutes. Then we have another one for 2 minutes, and this final one, actually, this one, I guess I got to refresh it. I'll refresh it later. Okay, what is going on with YouTube today? Let's see, refresh. Uh-oh. It's broken, guys. Dang. There we go.
Let's get more on the drop in crude oil prices after the president's comments. Paul Sank.
All right. So as I was saying, crude oil prices. So let's listen in on this clip.
Sankey Research joins us here on set. Paul, great to have you with us.
Hi.
What do you make of the president's comments, and how would you change your trade differently based on what he said?
Well, I took the comments to mean we're going to stop bombing, potentially. I mean, that's the only way I can see this as being declared as over. And I think that's what the GCC members want. It's just, for a start, let's stop bombing. What we've got to do is we've got to get ships going through the Straits of Hormuz, and that's not happening. So obviously the market reaction, you wouldn't be surprised with the Tokyo Open if we hit a massive high. We sell off throughout the day. And then, of course, there's the announcement that, we're nearly mission accomplished, you almost want to say. But the reality is here, we've never had a blockage in the Straits of Hormuz, and now we've shown what one looks like to all the wrong people. And making it safe again is going to be a real issue, a real nightmare, and I don't think this is over by a long way. The idea that we're going to have complete, it's a bit like you break it, you own it. Suddenly you're going to have to maintain security on what, as you know, is only a 60 square mile type area that's really, in many ways, for that reason, very, very difficult to defend, where you need 60 tankers crossing a day just to keep Asia running. And so, this is a kind of a nightmare scenario, quite frankly, and we still haven't got the tankers with their transponders on traveling through the Strait, and that's what we need.
I mean, the president in his comments to CBS said that ships are now traveling through the Strait, and I guess we'll see that on radar if that is actually the case. But it sounds like what you're describing, in order for ships to actually move and for storage to be freed up, et cetera, is a ceasefire. And that seems like it's a pretty fantastical idea, given the new guy in charge. The president just killed his father, his wife, his brother. I mean, basically everybody in his immediate family was killed by the Trump administration's actions.
Yeah, I mean, I think that they know now, what Trump's.
So I wasn't actually 100% sure if his mother had been killed. So now you have the new leader of Iran. His father and his mother were both killed. So he's definitely not looking to negotiate at this time, and he's definitely not looking to make sure that the United States walks away from this with the upper hand. So again, this is why kind of my base case is that this conflict is going to continue for at least a couple more weeks. If it shortens, of course, I want it to shorten. War is never good, but at least from a perspective of geopolitics, I think this is going to continue on, and we'll probably see maybe some volatility in the markets, especially when it comes to energy, because Iran knows that the Strait of Hormuz is extremely important, and high oil prices is pretty much the administration's weak point at this point, right? They're the ones going to be taking the flak. The United States is going to be the one taking the flak for this incursion into Iran, or this attack on Iran and destabilizing oil across the globe. So anyways, continuing on. Again, this is just my opinion, of course.
weak spot is. It's been uncovered in a very, very big way, and they probably want to play that, especially they're I'm sure aware that the midterms are coming up, that, there's this paranoia in the US about gasoline prices, everything else. And the situation, as you know, is actually that the US is the major exporter of oil and gas, and therefore we're less affected by this. But, my analysis on Saturday was about Taiwan. They're not getting any helium, let alone the LNG they need, and they've shut their nuclear plants, believe it or not. This could seriously affect chip production within a matter of months, and it has to be reopened. And we said that last Monday, that it had to be open by Friday. Sure enough, it wasn't, and you saw what happened to markets.
So synthesizing all the information that you have, where do you think oil should be right now?
I think it should have a higher floor. That's the first thing, is that this is risked oil globally. But the amount of oil that goes through this very risky point, we've never seen a shutdown there. Now we have. You've got to pay more for tankers. You've got to pay more for insurance. So I think what's happened here is you put in now a 60 floor. And then the question is, at what price do we get US production growing again? Because presumably growth out of the Middle East is going to be a much higher cost of capital growth. And actually what was happening prior to this event was that a lot of the major companies, notably Exxon, Chevron, everyone else, was getting into Iraq. They were getting back into the Middle East in a big way. And now I think they're going to have to reconsider whether or not you really want to deploy as much capital as you previously would have for what is clearly such a vulnerable supply point.
So, Paul, the market seems to be reacting to the proclamation.
We'll just move on from this clip. All right, we'll just move on from this clip. But he's pretty much hitting all the points that we kind of already discussed on this stream, and why it's so important to get this conflict pretty much it's a conclusion. But it doesn't look like that is going to happen. This is probably a first time event. There's no precedent for something like this, as far as like global energy being impacted by this conflict. So this is going to be interesting, guys. Absolutely interesting. We're probably going to see more choppiness. I don't know if you guys have read that poll yet or had a chance to read that poll, but yeah, I think there's going to be a lot more choppiness. It really does feel like we're going to be chopping lower. And maybe chop lower for, scenario that plays out for a couple of weeks, maybe a month, maybe 2 months. Is there going to be that one catalyst that happens where we have another liberation day, right? I don't know. Nobody really knows. But, again, that's still at the top of everybody's mind for this year, is that there's going to be some type of drop, some 15% drop on the indexes. And if that happens, that's going to be like Armageddon. So for me personally, holding a lot of dry powder, right? And I hope you guys are as well. Okay, so we have another clip about the Middle East and the sector rotation. So let's listen in on this one. This clip's about 2 minutes.
And welcome back to the Halftime Report. I'm Dominic Chu with your ETF Edge. Much has been made of this ongoing market sector rotation, but where does that stand amidst all the market turmoil in the Middle East? Joining me now for that conversation is Kim Arthur, the CEO and Portfolio Manager over at Main Management. And one of the things, Kim, that you do is run a sector rotation fund. So talk to us about how that sector rotation is playing out vis-a-vis what's happening in the Middle East.
Great, Dominic, thank you very much for having us. And a big shout out, first of all, to SIBO, which I'm sitting at here. They're a great partner of ours, and we have all our ETFs listed there, including the sector rotation that you mentioned. What I like to say, Dominic, is the market last October had a big mix shift. What I mean by that, it went from asset light, that would be technology, communications, consumer discretion, and it's rotated very hard into asset heavy, basic materials, industrials, and energies. Things that I like to say, if you remember back from your physics and chemistry day, the periodic table, if you drop one of those items on your toe, it hurts. So I think we've had a little bit of a sidetrack here with the attacks and war in the Middle East, but I still think that thesis is in shape. And when this passes, when Iran passes, this will continue. You still have big outperformance. Those asset heavy plays are up probably 15 points above the asset light. So that's a big mix shift in that period year to date.
And Kim, really quickly before we go, what's this technology trade going to look like in the coming months? Are people still going to flock back to it because of muscle memory?
Yeah, I think what will happen is tech is not dead. It's still going to do okay. But I think that this mix shift into the asset heavy plays will continue. Those cycles are long dated because of data center build out, manufacturing, onshoring, all these things that you need to kind of buy land, put metal in, put steel in the ground and fill them with heavy things that hurt when you drop them on your feet.
All right, Kim, Arthur, we're going to continue this conversation over at
All right, so rotation into real assets. You know, that's just been the theme for pretty much all of 2026. So just a quick look at this because somebody did post this in the community, in the Discord community. If you guys want to join, there's a link somewhere down below. You click to stay connected. But there was this ETF that dropped not too long ago, and it's called and this is from that person you were just listening to. It's called the Main Sector Rotation ETF. This is just a quick overview of it. You guys can check it out yourself at some point. But the fund objective is to outperform the S&P 500 in rising markets while limiting losses during periods of decline. All right. The fund seeks to achieve this objective through dynamic sector rotation. All right. We saw a lot of that rotation happening through State Street, right? This is the State Street sector tracker. So you can kind of see the inflows, outflows, what's been getting a lot more attention, not. We see energy has been absolutely dominating this year, right? Absolutely dominating this year. But over the last 5 days, we see that there's a lot of outflows away from materials, consumer staples, healthcare, industrials, right? The real assets, real estate has actually taken a dip as well, along with, communication services, info tech, et cetera, right? The usual suspects. But over the last month, we still see that utilities, energy, real estate was getting climbing higher over the last 3 months. Energy still, taking that lead. So the sector rotation is still happening, still very real. This is a good link to check out, guys, if you want to see what is gaining over the other. Where is the rotation happening to? It's delayed by about a couple of days. This is as of March 6th, so we'll see the current data sometime tomorrow. Okay. One last, let's see, what time is it actually? Okay. We're doing good on time. So, the global economy is subject to more violent and frequent shocks, says Mohammed El Arian. So I like to listen to this guy whenever he's on CNBC, anytime I see him. So let's listen in on what he has to say.
Arian at the table. The Rowan Curran, a professor of practice at the University of Pennsylvania's Wharton School of Business, also chief economic advisor at Allianz. Good morning to you. We're all trying to make sense of what's going on in Iran, the price of oil, what it ultimately means to the economy, and what it ultimately means to the price of stocks. What do you think?
So start with what the market thinks. The market thinks that this will be a temporary and reversible shock because, after all, we threw everything at the U.S. economy last year, and the economy proved incredibly resilient. So this will be the play once again.
Okay.
However, this time around, this is coming on top of a few things that are adding up. An uncertain labor market, affordability concerns. You have three distinct sources of financial fragility, and you have inflation that was already heading up, which limits policy flexibility. So I see the sort of central scenario that's an 80% probability in markets, about 50%. The bigger
Say
question,
again, you see an 80% scenario in markets at 50%.
no,
What does that mean?
that's the baseline right now in markets of a temporary and reversible
You think it's at
shock
80%?
is at 80%.
But you're saying you think it's actually at 50%.
Correct. And
Okay.
there's a bigger question that we see, which is we got to understand that this global economy is subject to more violent and more frequent shocks. And there's a really good reason for that. We've lost the unifying themes. So we just have to be ready for a lot of volatility this year.
And so when you think about this 80%, you think the market's at 80% in terms of this being resolved in 2 or 3 weeks from now in a good place.
Correct.
And your 50% basis is based upon what?
It's based simply that while the market nets things out, the economy compounds them.
Mm-hmm.
So if you put one shock after another, you lose financial resilience, you lose human resilience, and your ability to bounce back is less. And we have thrown a lot at this economy in the last 12 months. And right now, between the labor market, between the inflation dynamics, and between what's happening in the financial markets, there's reasons to be less.
Do you think there's any chance that things get worse, meaningfully worse in the Middle East? Meaning, China looks at this and says, oh my goodness, we can't have this anymore. And somehow they try to intervene or get involved in some way that we haven't even thought about yet.
So you had Jared on earlier today, and I was listening carefully to him because I have a lot of respect for how he thinks about these issues. I think the point he made about asymmetrical wars have an unpredictable element to them that you have to take seriously. And that is why the left tail is so big here, because there is this element of unpredictability.
Okay, but let me throw in a different a domestic political issue, which is this president has been very cognizant, to his credit, of what's going on in our economy here. And so there's part of me that wonders whether he could look at what's happening and say, you know what, I wanted to do this for 2 or 3 weeks or 4 weeks. There's still stuff I want to do on the ground, but you know what, I can't have it this way. And politically, it's going to be bad for me. It's going to be bad for Republicans. We're going to the midterms. I can't have oil prices at these numbers. And then he steps away. What do you think the chances are that that happens?
That's certainly possible, but he also needs to convince 2 other parties to step away, Israel and Iran, and they have different agendas at this point. So that's point number one. Second, he's already aware of this because he said over the weekend, the higher oil price is a price that's worth paying. However, it compounds the affordability issues. So he's going to keep an eye on that. The one thing I would stress is we've got to stop thinking that oil supplies and supply chains are like an on-off switch. You can't turn it back on. If the UAE, Kuwait, and Qatar stop production, it will take weeks to resume production.
Also, part of the reason they're stopping production is they're filled to the brim. They have nowhere else to store this.
They've reduced production. They haven't stopped it yet.
Right, but it would be, look, if you can get the ships moving again, you can start kind of quickly unloading some of that stuff that's been building up in the meantime.
If you can get the ships moving again, if you can get new ships coming in,
Your point is, what's the time frame for when this is like, oh boy, this is...
It is weeks and months. It's not days. I mean, there's this assumption in the market that it is days.
Yeah.
And we seem to have forgotten the lesson of COVID, is when you impose a sudden stop on supply chains, things are in the wrong place when you want to start them again.
The end for COVID, when we had these problems.
All right, well, there you guys go. Again, restarting production, all that stuff is not just going to happen. It's not just an on-off switch. I did see a interesting article. I hadn't read it quite yet, but this is from Yardeni Research, and my screen is black. Let's go. Come on. Yeah, I think I have way too many tabs open, and now it's finally starting to crash my crash my browser over here. Let's see. Let's try one more time. Boo. Okay. Well, let me see if I can put it over here. Okay. Anyways, moving on. All right. Unfortunately, there we go. Okay. Let's see if I can move this over. Okay. So Yardeni raises meltdown odds as poly market now sees a 37% in U.S. Recession risk. Of course, now we're starting to hear the narrative of a possible recession, right? But I have to mention it because I think it's important. You had 2 very prominent individuals last year, well, 3 really. You had Kathy Woods, Paul Tudor Jones, and Michael Sonnenfeld, Tiger 21 founder. They were all saying that this could be an inflation year. Oh, please do not tell me this is about to blow up. Oh, this would be terrible. Oh, well, I might be losing you guys here in a minute because I think I just froze my entire computer. Well, ain't that some stuff, especially right in the middle of a stream. Okay. Hopefully I didn't lose you guys. All right. So anyways, I wanted to at least show you guys that. This is from the Kobesi letter. I thought this was really well done. They actually have a whole article that goes over this stuff, and it goes over the typical Trump playbook of what's going on, right? And you guys kind of position yourselves whenever you start to hear news, right? Positioning of U.S. forces, threats, going on Twitter rants or true social rants, right? They actually outlaid it pretty well. But from the Kobesi letter, they're saying that it doesn't get more textbook than this. Every step of our March 3rd conflict playbook has been outlined in on this oil price chart. It began with steps 1 and 2 when Trump sent an armada to Iran and ramped up threats. February 27th, we saw the Friday night strikes. And then step 3 of our playbook, this led to step 4 as risk premiums were rapidly priced in. And then on March 3rd, President Trump began saying that the war could last forever as expected in step 5. And then on Friday and last night, markets began pricing in step number 6, a prolonged conflict sending oil prices to $120 a barrel. And then finally today at 3:20 p.m., President Trump hinted at a conditional de-escalation from step number 7 of their conflict playbook. But, the IRGC already came out and said that, we'll decide when things de-escalate, not the United States. So again, you have a lot of tit for tat happening right now, but I thought this was really well done. Recommend people, if you have an X account, check out the Kobesi letter, right? Check out that article. They really do go in depth. I haven't had a chance to go through the whole thing. The parts I did read, I was pretty impressed by it. Okay, moving on. We're kind of running out on time here. All right, but NVIDIA is planning to launch an open source AI agent platform. All right, so we kind of completed our oil, Iran, US war segment. So we're moving on to the rest of the news, right? So NVIDIA is planning to launch an open source AI agent platform. This is ahead of its annual developer conference. There's not much news on this, but it's going to be a software that embraces AI agents similar to OpenClaw. So they're coming out with their own agent platform, right? So if you guys haven't checked out what OpenClaw is, definitely watch a YouTube video or two on it. There's a lot of fascinating things you can do with it. People are installing it on their MacBooks. I think you need a Linux-based system. So if you're on Windows, it's a couple extra steps if you want to install like OpenClaw on your computer. But this is, the next form of agentic AI, and we're already seeing it being used. These agents can actually click buttons. They can type things. They can do research. They can look through web browsers. They can click on links, etc. There's a lot of things that they can open up, like Outlook Outlook Calendar. They can do a lot of things. And what is fascinating about this, at least from like and I hate to go down this route, but from like an entrepreneurial point of view, people are able to, instead of hiring people off Fiverr or WeWork or whatever, or not WeWork, Fiverr and Upwork and all these other assistants, virtual assistants, things like that, they can actually just build out their AI agents to do all that stuff, right? So now we're starting to see that productivity from just a very base level, from an individual level. So I think this is a really a big deal, especially because we've never had anything close to this. We've never had anything close to it. You had to hire out people in order to do your thumbnails, in order to do your descriptions, your titles. Now AI agents can do all that. Just AI in general can do all of that. May not be the best, but it can do it, right? And we're seeing that, even in content, even in social media content creators, they're outsourcing a lot of stuff to their AIs, right? They don't need to hire a whole staff anymore. You have artists that are losing a lot of work because you have artificial intelligence that can just do it. So this is just another nail in the coffin, if I can even use that term, but just another nail in the coffin, and why people really should take this seriously, especially for their own careers, especially for their own, their own life, right? Anyways, moving on from that. Anthropic is going to be suing the Trump administration. We saw this happen unfold last week, where Anthropic was labeled a supply chain risk, which is a designation usually reserved for foreign companies that have ties to foreign governments, right? China, to name one, right? But Anthropic was given this designation by the Department of War because Anthropic went and basically said that they did not want their software to be used for mass surveillance / autonomous weapons, and that started pretty much this whole issue. So Anthropic ended up losing this contract over the next 6 months, and OpenAI went in and picked it up. Excuse me, but Anthropic is suing the Trump administration to get them to lose that designation and reinstate their contracts. So this is not the end, right? And again, we were talking in an earlier stream about this is going to be the next hurdle for AI companies, is being utilized by the government, right, for whatever lawful purposes. But I heard an interesting take from, I believe, the CTO of the War Department or the Department of War, basically saying that they were going back and forth with Anthropic on this, right? And Anthropic is using this as a PR stunt, is his perspective, because they were always looking for something in their contract, in the terms of usage, right, or whatever that contract terminology is. But you had the Department of War saying that, yeah, we want to use it for this, right? We want to use it for this, and Anthropic would be like, well, okay, well, we'll change the language in the contract so you can use it. Well, we'll change the language in the contract for this. And finally, they just settle on all lawful purposes. The Department of War, would not do anything illegal, right? They would follow the rules set by Congress or set by the administration or set by, the rules of war, that they're not going to just use Anthropic for unlawful reasons, right? Which would be mass surveillance, even though that's already happening anyways. So this was a moment for Anthropic to say and come out and cause some ripples and say, hey, we don't want our AI models to be used for this. And of course, that's not a done battle. You're going to have OpenAI that's going to get entrenched in this. You're going to have other models like Gemini or Microsoft's or Perplexity or whatever. You have all these other AI models that are going to get wrapped into this, because if they're being used for, excuse me, sorry, I just heard something smacking on my window. If they're going to be used for, unlawful purposes, whatever that might be, this is just going to be a quagmire. It's going to be a can of worms. So this is going to be interesting. Sean says, I'm going to sue Trump too. Well, Trump is also suing the Treasury. No, not the Treasury, suing the IRS, for releasing his tax documents, so he's basically going to write his own check at this point. Let's see. Absolutely interesting. Let's see. I'm just checking the chat here. Okay. So anyways, this is not over. This is not over. Again, I could personally see Anthropic, OpenAI, Gemini, Google, everyone else getting wrapped into this fight, because their models are going to be used by the government one way or the other, and this is going to have to be battled out in court. But anyways, Anthropic filed a lawsuit against the Trump administration after the company was blacklisted and deemed a threat to U.S. national security. The startup was officially designated a supply chain risk. Anthropic has asked the court to vacate the supply chain risk designation and grant the company to stay on the action. The complaint says the actions could jeopardize hundreds of millions of dollars in revenue. And you have Anthropic, OpenAI that are expected to IPO soon, probably this year, if not the first half of 2027. So big deal, especially for someone like Anthropic, where their models are now technically blacklisted by all federal government agencies. So not a good way to start the year. That is my favorite word. You be quiet. That is my favorite word. All right. Moving on, nothing here. This is blank. Let's see. So moving on to our metals segment, antimony demand surges as military tech boom pushes market towards $4 billion. All right, and see, now you got me being worried about saying the word interesting. There was a good post, all right, by Robert Friedland. Follow him. He's a metals expert. Same with someone like Rick Rule. You guys can check out their interviews or their keynote speeches on YouTube. Definitely, if you want to be involved in the metals or the commodity space, definitely these two names are people you should look up. But Robert Friedland says missiles like the Tomahawk and the advanced defenses against them consume vast quantities of critical minerals far beyond just copper. All right, these systems increasingly depend on scandium, aluminum alloys to reduce weight, extend range, and enhance payload performance under extreme conditions. That's exactly why these are designed or designated critical raw materials. National security hinges on secure, diversified supplies of scandium, rare earths, tungsten, gallium, and more. I'm backing, I think he meant Sunrise Metals, maybe, to help deliver the solution, innovative, responsibly sourcing to meet the growing demand. So we can kind of see all the different metals that go into a single missile. And there's been hundreds and hundreds of missiles fired over these last couple of weeks, right? You have a lot of Tomahawks being fired, and not just Tomahawks. You also have, Iran that's firing their own missiles, and Israel as well. So it's just, this is all the metals that come into or that are packed into a single missile. All right, you have silver, tungsten, which I believe, Padre is going to have his victory lap because he's been calling it for a while now, or at least a couple of weeks, as far as I know. He's been talking about tungsten as well. We have, let's see, cobalt, vanadium, copper, all right, not just the wiring, but copper as well, titanium and phosphorus, right? So a ton of these metals go into a single missile. And the Trump administration met with a lot of defense contractors recently and told them that, basically to quadruple production. So Raytheon was definitely there, Lockheed Martin. So you're going to have all these defense contractors ramping up production. What do you think they're going to need? All right, they're going to need silver. They're going to need tungsten. They're going to need the periodic table is Tungsten Tiger, Padre, Victor, all those aliases always says. So, again, if you're following the commodities space, the commodities trade right now, what's really, really hot, and I don't hold me to this, but, basically what I've been hearing is that copper is going to be extremely important. There's not enough mines, and to open a new mine for copper extraction is not something that happens in a week or 2 weeks or even a year. Sometimes it could take multiple years. There's not enough copper mines. And with the data center build out, on top of upgrading, right? Upgrading the power grid, you're going to need a ton. And I cannot overstate that enough. You're going to need a ton, not no pun, but you're going to need a ton of copper. Okay. So my bet is on copper. For me personally, I'm invested in the copper miners. And what's interesting as far as the miners are concerned, you know, the copper miners, silver miners, gold miners, is that they are priced, you know, much lower than what the price of the metal is or could be. So in the future, when these metals continue to climb higher, these miners are going to get re-rated, right? Because they're mining this metal, and that's on the balance sheet, which should make these miners more valuable. We saw the miners sell off because of, you know, or at least the connection was from the oil impacts, right? All these mining companies, they have very big amounts of equipment, large amounts of equipment that rely on fuel, that rely on gas, that rely on, you know, these oils, right? Not only that, it takes oil to refine the metals, to have that purity, to have that pure copper, that pure gold, silver, tungsten, whatever, right? So that is why oil is so damn important, and why it can impact not just the oil market, but it has ripple effects across the entire market. So anyways, wanted to cover that piece. I thought it was really, really important. And that is Robert Friedland. Again, definitely check him out. I cannot recommend him highly enough. Oh, look at that. We got 44 viewers on X. Well, shout out to all the X viewers. All right. Happy to have you guys here. Definitely check out Robert Friedland if you want to follow the commodity space. All right, guys. I think that is the full stream. All right. We covered quite a bit in this stream. I don't think I really have anything else. Let me see and check the chats here. Let's see. Hey, Michael Burry is doing Michael Burry stuff, man. He's still shorting Palantir and long GameStop for some reason. I mean, I don't get it. I'm not going to pay for his Substack to understand it. But yes, he's long GameStop and short Palantir. I don't even have an opinion about that. Let's see what else. We have from, let's see. I want to say Leah the Face or Letha Face, like lethal. But hey, I appreciate the comment. Thank you for the coverage. I appreciate it. Surgeon says, can they add gold to tomahawks as well, please? Oh man, people after an impact would happen, people would be all over that impact looking for it, looking for that gold. Could you imagine that though? Could you imagine a tomahawk or missiles just having also gold, or just any, like even the silver? Like people would have to go and start looking for the silver. Let's see. Well, all right, ladies and gentlemen, I think that'll do it for me. All right. So we have from Tradesman, need to monetize your channel. You know, I like doing this stuff for free. The monetization was actually coming from the videos, but I mean, you don't really make a whole lot of money, right? With YouTube ads. And I stopped doing videos just because it gets to a point where it's like, you can't keep innovating your damn portfolio. Right. And I really, it's not that, like, I don't know. I don't like doing ETF reviews like some of the other channels. I mean, they're valuable. The information is valuable and educational, you know, by and large, but I just personally don't like it. I like more of the tactical kind of stuff. If you're looking at an ETF, where would it fit in a portfolio, that kind of stuff, not just, oh, here are the holdings and this is the expense ratio and this is compared to another ETF in the same category, right? Like I cannot do those damn videos, man. I'm telling you, they drive me insane. I'm not saying it's bad content. I'm not saying taking a punch at any content creators. I get it. You know, there's always going to be somebody new to the space, new to investing, that could find that information absolutely invaluable. So again, I'm not being critical of the creators. I'm just saying I can't do that type of content myself because I start to go brain dead. I like to cover mostly this type of stuff. So when we're talking about monetization, you know, I don't want to monetize the streams. I thought about it way long ago, but I have not monetized a single stream. I keep ads off. And the reason for that is because, you know, some of this information is valuable, right? It's free. You know, I don't mind doing these streams for free. I enjoy it. I get to connect with you guys. You know, you guys are the community. I get to enjoy cutting it up with you guys in the chat. And, you know, from time to time, I meet interesting people. There's that word again, interesting. I get to meet people who, you know, are smarter than me, right? So I don't mind doing this stuff for free. Michael Burry got short squeezed over and over again. Yeah, that's probably true. I don't know. Like, I just don't get it. Why would you be bullish GameStop over Palantir? I don't know, man. I know he pissed off the Palantir community like pretty badly because of his lack of understanding of what Palantir is. And I had to read through a lot of those posts, and I actually learned a couple of things myself about Palantir that I wasn't fully aware of. And again, I'm just bullish on Palantir. I like Alex Karp. He's very outspoken. He has no filter, and his values are kind of aligned to my values. I like what he's doing. He has an America first, type of mindset. He's willing to support the warfighter in all efforts. And, me having the background that I do, again, supporting the warfighter is important to me anyways. Let's see. Sergio says we need a REIT and real estate episode. Maybe in the future. I have not covered real estate in a very, very long time. Maybe I'll start covering REITs again. Real estate's just been, like I said, like I always have been saying, REITs have been in this really bad bear market, very unloved asset, but I think they're making a comeback. If you're looking for a contrarian bet, I think real estate would be that contrarian bet, at least over the long term. Again, I like REITs. They beat. I'm still of the belief that REITs can beat not only your rental properties long term, but also large real estate funds. They have shown to outperform large real estate funds. And these are the funds that only accredited investors are allowed into. On top of that, over longer periods of time, they can outperform, even private real estate as well. But again, it's like those time frames, you're getting into like the 25, 30-year range. Who wants to hold, REITs for that long? There's some people that do, some people that want to hold REITs for that long time period. I like REITs. I still like REITs. You got to choose the right REIT though. And there's some sectors within the REIT, universe that I don't really like. And office buildings is one of them. Malls is another. I think that those two sectors are pretty much going to get destroyed. Especially with, retail like Amazon, Walmart, Costco doing shipping directly to homes, maybe not Costco, but Walmart. And you have Amazon, Walmart competing against each other. For office space, I mean, you have artificial intelligence, right? You could do more with less, right? So people are closing up their offices. They're not leasing as much space for offices. Offices are trying to reorganize their space into living, situations, condos, etc. So, I mean, the office space is getting absolutely clobbered. I hope you're referring to Michael Burry. I hope you're referring to Michael Burry. I'm on coffee, if anything. I'm on a caffeine high. Padre says they have 50-year mortgages now in case you'd rather hold a real thing for longer. that 50-year mortgage is an absolute, like, if you do the math, if the maths, you're overpaying for real estate in that point of view. It doesn't matter if it's a rental property. Like, you're overpaying one way or the other. The 50-year mortgage is an absolute joke. At least that's my stance. I have not heard anything good come from that or any good analysis come from that that's saying that 50-year mortgages make sense. Realty. Oh, all right. Realty income. I think it's a dividend king or a dividend aristocrat, but yeah, it's has like I think 30 years or 30 plus years of consistent dividend. But yeah, realty income is one of my favorite REITs, although I don't have a position in realty income any longer. We have Sean saying, I've been buying Palantir. Foreign people and countries own a lot of the United States. Yeah, but they do own a lot of real estate. I will say that. I will agree with that point. The building I used to work at in the US actually got purchased by a Chinese company. Although it wasn't a Chinese company, it was an American company, right? But the owner of the business actually was doing a lot of the digging and found out that it was a Chinese company that was buying it up, and they were buying up a large portion of that town that I worked in, and yeah, they're just buying it all up, right? Buying it all up. If they had like actual ties to the Chinese government or not, doubtful. It was probably just, a bunch of investors that are buying up, commercial real estate. Let's see. All right. Well, ladies and gentlemen, I think that's going to do it for me. As always, I appreciate you guys joining me for this stream. You guys have a wonderful day, a wonderful night. Hit that like button, hit that subscribe if you enjoyed the stream. I do appreciate it. It does help out the channel quite a bit. And outside of that, I will see you guys in the next stream. You guys have a wonderful day, night, evening, wherever you are in the world. All right. Take care.